Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely are Chris Versace, is the Chief Investment Officer and Co-Founder and Thematic Strategist for Tematica Research. We're going to learn about modeling out the coronavirus themes and sectors to watch. Chris, it's great to have you with us on Trade Talks. Thanks so much for joining us. And, for a day that isn't showing much short-term good news, you would think the major averages would average differently. Why do you think we're seeing, such an upswing today?
I have to agree with you, Jill, that when we look at the news coming out of the weekend, we see the continued expansion of the virus in terms of the number of cases around the world, the number of fatalities that continue to grow in aggregate. It is kind of a head scratcher. We're still getting companies that are pulling guidance with a fresh batch this morning, companies cutting dividends. Again, a fresh batch this morning. The only thing that I could think of is that, we are starting to see in northern Italy the number of cases start to subside. And I think perhaps people are looking a little ahead, thinking that, yes, this is a medical crisis. It's one of a duration, which is the big question. Perhaps we're starting to get a better sense as to what that timeline looks at. So, perhaps some hopium, if you will, is in the markets.
Yeah, and if we take a look at our first chart here, this is a CNN Fear and Greed Index. Many of our viewers are familiar with this, and perhaps one of the reasons we're still seeing it significantly on the left, on the fear side, perhaps until we get these violent swings, whether it's to the up or downside out of the market, there's just fear there until the market finds a more established range. Do you think that could be part of the reason?
I think you're right. I think, investors really want to see the market settle out, find its footing. You use the phrase that you want. And I think what we saw last week is probably what we're going to see, where, we were started off down, and then we had 3 big days, and then we were down again. This is all part of the process of the market, again, digesting what's happening. And if you think about some of the things that we've seen, the rash of closures, like I mentioned, but even now extensions where Walt Disney announced over the weekend that Disneyland, Disney World were expected to open up April 18th. Now they're closed TBD. So uncertainty. We're seeing companies like Ross Stores that not only closed their doors, but have announced purchase order cancellations through June. And we're hearing suppliers say the same thing about Macy's, TJX companies, Nordstrom's, and some others. So I think that until we have a real sense as to what the full impact there is, are we going to see more negative revisions for economic data? Yes. More EPS cuts, more than likely, maybe even some more dividend cuts. And until we see that pace slow, along with the pace of new corona cases, I think the market's going to remain volatile. And I think that CNN Fear and Greed Index speaks to that.
All right, moving along to our next slide here, the impact to retail. When you take a look at all the different sectors that really will feel the pain, and of course, you'll feel in the travel industry, in the insurance industry, and so forth. But when you think about the unemployment numbers and the impact it's going to have within the service industry, retail is the one that comes up in my mind.
Oh, absolutely. I mean, people will need to eat, right? So that's why you'll continue to see business at Kroger's, Walmart, and the like. But it's the bleed over from not being able to shop to what is my job situation? What is my disposable income situation at the margin? I think you're 100% correct. It's traditional brick and mortar retail in particular that is going to take it on the chin.
All right, moving along to our final slide here, taking a look at the different themes versus sectors. And on the flip side of that, the digital lifestyle that we've all been accustomed to, happy hours with friends, meetings around the
right.
world via Zoom and other intimerities such as that. So let's learn more about what you're thinking from the digital lifestyle, companies to watch there. And then I want to wrap up with a more macro picture in terms of economic data that's going to start to come out and reflect what you and I have just been talking about and what that means with layoffs, with stimulus. So there's kind of a lot to unwrap here.
Yeah, no worries at all. So, first and foremost, we always look at the world thematically. So we try to look for those structural changes that are happening and the disruption that they bring with them. So we tend not to think about sectors. We think sectors is an antiquated way to look at things. Real quick, if you buy a sector through an ETF, you not only get the well-positioned companies, you get the poorly positioned companies. So again, we tend to think of the world thematically. And the digital lifestyle, look, we are cocooning, and whether, like we're conducting this conversation over Zoom, or you're looking for something over Microsoft Teams, you look at how people are paying their bills, the content they're consuming, whether it's going to be this latest craze of Tiger King on Netflix or Westworld on HBO, increasingly it is streaming in nature. But there's also just continuing to connect the dots from some things we were talking about, our middle class squeeze investment theme, where people will be hurting because of these layoffs, because of these furloughs, the lost income and lost wages that folks from restaurants to retail to a growing number of industries are going to be feeling. We see those consumers looking to continue to stretch their disposable spending dollars. That's good news for companies like Costco, like Walmart, and if the brick and mortar gets back, perhaps TJX companies or Ross stores as well. People will be eating more at home. To us, we like McCormick and Company, but we also think too that there's a number of well-positioned dividend-paying companies that are they have wonderful inelastic business models, meaning people are going to continue to use them no matter what. Those are your AT&Ts, your Waste Management, Verizon, even your ADT, because I can't think anybody's going to cut the alarm service to their house. Shifting gears with what you said, over the next couple of days, we're going to start to see a lot of the coronavirus data flow through into the economic data points that we'll be getting. The two big ones to watch this week, obviously people will be taking a look at the March employment report that drops on Friday. But before that, we're going to get the IHS market PMI data for March for China, Japan, the Eurozone, and the US. And that is going to tell us a lot, particularly on the order front. So those are the two big things we would be watching for this week.
All right, Chris, great to spend some time with you. Thanks so much for joining us.
Oh, thank you, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.